What's up, everybody? Tom here with another video. Well, we're in big earnings at the moment, and of course, we've just seen the beginning of the big tech. Snap just came out, Intel just came out after markets, and it wasn't looking good. Intel was down, but Snap plummeted as it blamed Apple for its sales miss. Facebook, Google, Twitter, Pinterest all fell. The question is it a bigger catalyst for more of a pullback correction, or is this just the beginning of what we're going to see in terms of missed estimates moving forward in the big technology companies? Stay tuned, guys. This will be a good one. All right, everybody. Well, this begins our market recap for the markets closed 21st of October 2021. And remember, if you're interested in markets around the world, especially the US market, this is the channel for you. Please click that subscribe button if you enjoy our content. And of course, smash the thumbs up if you do enjoy the video and find value from it. Let's talk about the S&P 500 heat map here. So this is basically the large companies. We had some good runs, Nvidia running well, Tesla rebounding after the earnings hit basically, or a slight beat. And this is very testament to what's happened. We've seen the buy the rumor, sell the fact into the event just on that kind of couple of days before. And then retail likes what they see. A lot of people like the result overall and they start buying back up. Similar to exactly what happened in the previous earnings session. PayPal down 5.86%, doesn't like, or the market doesn't like the Pinterest news. And Intel was up and AMD was up even more. And then what happened is Intel went straight back down and AMD went straight back up after hours. So this is just more in the war between those two companies from the perspective of which one is beating out. So Intel kind of did well in certain areas, such as their data center, but generally they missed their outlook. And of course, when a stock misses outlook, especially a tech stock, it is going to get beaten down. Similar to Snap, if you miss outlook, it's not looking so good. And I think Snap should probably be a bit of a warning sign for certain people that are in stocks on what to expect when technology misses, if it's a growth stock or a hyper growth stock. In general, a miss is going to knock around 20 to 25% off a hyper growth stock. That's how much price is packed in to that compounding on compounding on compounding idea of growth. So just remember that and keep that in the back of your mind, because when Wall Street invest, their biggest concern is always risk-adjusted returns. That's what they want to be looking at. So the day in repeat, what happened here was we actually had buying into the close. We had the Nasdaq up 0.66%, S&P 500 up 0.3%, and the Dow basically coming in flat. And that was kind of held back a little bit by certain sectors. Which sectors were holding it back? Energy for the Dow, financials not doing so well, while we did have consumer discretionary, biotech, healthcare, and a little bit of technology doing better. Now, this was all reversed, and it becomes at a very important time. But before we get into the technical analysis, we do cover a bit of crypto on this channel, and I want to talk about a situation here. And that is that the Binance, Bitcoin exchange, and a few others, I believe, experienced a flash crash. Now, it's not a real flash crash in terms of it's a liquidity feed or bug, but I'll be very interested to see how they deal with this situation. I've been part of a few of these over the years. They do happen semi-regularly, once every couple of years, really, you see this type of thing occur. And I'll be interested to see how they deal with this problem. So we'll probably continue covering this story. We'll have a look at the chart and what it showed up as in terms of a spike. It's not really what happened to price. It's more of a fake liquidity feed or a price coming through that's incorrect. That creates this spike, and it wasn't across the board. Remember, did BTC really crash to 8,200? No, it was more what was provided from that particular liquidity entity. Now, let's talk about VIX and talk about the volatility in the markets right now, coming right back down. Volatility suddenly dropped to 15. I'd expect the VIX to come out of the gates tomorrow with some bullishness. So basically, the VIX hit 15. We talk about the VIX when it hits 15 for now. And in general, you'll expect during a normal bullish market, the VIX to be between that 10 and 12 level. Because we're coming off a pandemic year, a crash market, we expect this to be the area where the market kind of finds that little bit of increased volatility. And if we're seeing a little bit too much FOMO, a little too much bullish intentions, those types of things, we pay attention to the VIX here. The bears come out and they start to say, well, you know, is there a reason why I might be able to place a quick, fast short or something like that, because this is the zone where a lot of people are targeting at this stage. Let's move over to the US 10-year, because this is the other elephant in the room in terms of we've seen the market being bullish, which is great. And don't get me wrong, I agree with the price action and everything that's happening there, but it hasn't pulled back now in, I think, 7 days. It's kind of statistically unlikely that it does that type of thing. And we have the 10-year going up day on day on day. Now, we've pretty much shown that the initial reaction to 10-year, or the US 10-year this is, in yields, usually causes a pullback in the Nasdaq, at least just a temporary one. So I think the market's become a little bit accustomed to this. If this continues to go, it just hit 1.7. If this continues to go to 1.75 and then it keeps going up, of course, this will most likely cause the QQQ, the Nasdaq, to come down a little bit, as they're kind of correlated together, at least initially, and it's being ignored by the market. So it's one of those things in plain sight that could be used as an excuse if it wasn't for the fact that we just had bad earnings on Snap and Intel. So what happened across the market? Well, we'll talk about Tesla first, then we'll go into Apple, then we'll go into our thoughts on Snap and our thoughts on, of course, S&P 500 and Nasdaq themselves. Tesla out of the gates, very strong for the session. It's only down 0.35% in the post-market. That's still very good considering what happened to the Nasdaq overall. And it looks like Tesla's getting ready for its seasonal strength to continue here into November. Will we get 1,000 by the end of November? Guys in the chat, let me know. What do you think? Is Tesla going to break an all-time high through the Friday session and then just continuously ramp? Or are we going to see a little bit of a pullback first? Let's take a look at the weekly here. We know that Tesla can get on some pretty extreme runs. We've seen it before. Extreme run number 1 over here. And of course, there's plenty in the past. So we get past 900. Figuratively, the next big stop is 1,000. Of course, just under 1,000 is probably where there will be some sellers and people will get into it. We've got that big trend line for the longer term investor that might be something that you look at in the future. And it's looking overall bullish. We've been bullish the chart now for a while, and I think for good reason. Another thing we'll want to watch in the open interest from the option side is, look, someone continues to be bearish on this stock, and that's a good thing, I think, for the bulls. When everyone's placing bearish positions, stocks tend not to actually drop as much as you think. But I do notice here there is a little bit of an increase in $900 calls for the Friday session. So maybe that will keep Tesla kind of just like holding around that 900, not being able to get past it for at least the Friday, wait for the expiration. And then of course in the weekend video, we're going to take a look at where the new options are open for the next week. Remember, this is how we use it. We use it as along with our technical analysis. Technical analysis number 1, the options just gives us a little bit of more clarity on whether our key resistances or key supports are good. Let's talk about Apple. So this is now the market that everyone's probably going to be disliking, because of course Apple are hurting the revenue across the board for the companies like Google, Facebook, Snap. We're well aware of that problem when they cut their kind of percentages down. But overall, Apple, that 150, that continues to be that real thing, or the sticking point for this week. We continue to see an increased ramp. If you watch the videos that we've done covering the market this week so far, we've had, I think it was like 400,000 to start with, 500,000, 660,000, 70,000 in terms of open interest. So huge amounts of increase in open interest all at one strike. Points to me that someone in retail is pretty much grabbing all of this strike, looking for gold for the week ahead, looking for the 22nd of expiry, and they're not going to probably get it. I mean, in Apple at this stage is just finding resistance right at that 150 level. Let's move over now to the broader markets. Let's talk about the SPX to start off with. So the SPX, we've theorized, is at a bit of a resistance. Now, some people say, oh, but Tom, that broke out. When we take a look at the aftermarket, you'll see it came down a little bit. But how many days have we got here? 1, 2, oh, actually, let's just quickly go back over to the days here so we can count them correctly. So we've got 1, 2, 3, 4, 5, 6, 7. So that's 7 days in a row that we've got bullish action coming into the markets. That's pretty incredible. That's actually a very big run. There's not many times that you see 7 bullish days in a row. You do get bullish runs, but there's even a little bit of red in here, a little doji. So this is a 1, 2, there's a red one, 1, 2, 3, little red one, 1, 2, 3, little red one. So it is overdue a small pullback. Now, I would love it to go back to the 44.60 here, or maybe even the 44.20. These two zones make a lot of sense. I think 44.60 makes the most sense because we're far away from the daily 20 at this stage. We pull back, maybe this Snap stuff or Intel as a catalyst, the 10 years a catalyst across the board. We get back into the 44.60, and then of course we continue into the earnings period should we continue to hit. And next week on the videos, what we'll do is we'll start to bring in beats and misses, a very important statistic that people often overlook during the earnings season. We want to make sure there's as many companies as possible beating estimates, and if they're not, and we start to see that trend continue, Wall Street will pay attention and you'll see it in the price action. So yeah, we're at that resistance. I still think it's there. I called it basically 2 days ago from a technical perspective, and we've grinded higher. Not really that much higher, but we have grinded higher. Now, a few of you are probably like, this is still keeps going. With the Nasdaq today, it was up about 0.61% here on the QQQ. But after hours, it obviously switched quite considerably. So this is the QQQ. Again, if we could get back to the 20 moving average, it's a standard kind of rollover. We get the movement down, pick up, perfect stuff there. That would be fantastic. Let's think about the US 100. Here's where the futures actually are at this stage. 15,000, let's call it 400. If we get back down to this zone, that would be excellent. Let's talk about the NDX. This is the area that I've discussed for a while. If we go over to the daily, you'll see why. 20 and 50 moving average right there. Ideal pullback kind of stages in that 2 steps forward, 1 step back, 2 steps forward, 1 step back style philosophy of a nice bullish movement. And you might think, well, that's not going to happen. It generally will just keep going up. The markets never come down. The markets never pull back, etc., etc. Just remember, in general, they will. Wall Street likes to give a second entry for people around those kind of areas, whether it happens now or it happens in November or it happens whenever it might do it. You will usually get a bit of a pullback to that zone. Wall Street loves to grab it again. And it's one of the traps, it's one of the common concepts that you see in markets. If you go back through the years and you do your chart studies, you will see this is what ends up occurring. Let's hope we get a little bit of resistance here. Small pullback in the markets would be fine. And then if we see that, we can then move ahead with hopefully some bullishness into the earnings season. So the only caveat to that, what about earnings themselves? Will we continue to see guidance being so bad? Snap came out here post-market. You'll notice on the right side, 58.60. Very bad, down 21.98%, but it was worse. At one point, it was about 52 and a bit. So it was down here at one point. Some people were buying the dip after markets in the live stream. I'm sure they were looking at it from the perspective of, well, this is a discount and I like the company. It's getting back into a structural range. I don't blame them for that, but of course you're basically just saying, okay, I think I'm going to try to buy that dip. Now, in technology companies, they often come back statistically, but some companies don't. If you buy a financial that drops 25% a day, or an energy company that drops 25% of the day, you might want to go really look at the fundamentals because they have a hard time filling the gaps on the up. And in fact, statistically, most of them won't fill. So it's very important that you think about which thing you're buying the dip on, because I think that buy the dip strategy that everyone uses, while it's valid if you buy quality and you buy across the board and obviously have your risk management in place, it's not always valid when you buy the wrong company. And I'm sure a few of you have been burnt by that. If you have a story, let us know in the chat down below as well, and I'll feature it on one of our live streams. Because really with these stories, what you're doing is you're helping educate others, you're helping others, and more importantly, we all have very similar kinds of concepts and things that have happened in the market. The more people that are aware of this, the more that don't make that mistake, and therefore they get to, hopefully keep their money in their pockets and not make poor decisions in the future. So what will happen with Snap? It was a guess really, but in general, these tech companies do like to try to fill the gap. We've seen Pinterest took a long time, and Snap might weaken. There's a chance it might weaken as well into this $50 kind of support area. I love it when they create, of course, structural bases like channels or double bottoms, and then they come back through. Time will tell. We'll find out how much it tries to bounce tomorrow and whether this is the catalyst for further weakness through the NAS. Now, Bitcoin. So it is pulling back. It hit that 67,000 level. It's pulling back now. It's at 60, just under 63. A few people are speculating on a few things. Why is it pulling back? Could it be that the Binance, let's call flash crash, was the reason? Let's just take a look at what that looks like on a chart. There it is. Imagine if you saw this. Oh, and I'm sure a few people accidentally got closed and stuff. I'd be very interested to see how they deal with this situation. But unfortunate liquidity feeds. Here's the issue with it though. Whenever you have this type of event, you kind of hurt confidence a little bit. And I think that with Bitcoin being so high anyway, maybe it's time for it to come back down, test that daily 20, test that 60,000 level and hover around it for a little while. Consolidate, allow some of the alts to catch up, allow Ethereum to also consolidate. And then we move forward. What do you think in the comments, guys? Do you believe that Bitcoin is going to hit 70 in the next week or two? Or do you think a little bit of consolidation here followed by follow through into Thanksgiving, into the seasonal events that we've seen be positive for Bitcoin in the future? If we go down to the 4 hour, really, there's not much we can ascertain here other than the 50 exponential moving average has held it once. If we get things like long leg dojis or little double bottoms like we had over here, that will be bullish. It's been the 20 and the 50 on this time frame that have been best so far. So we'll continue to watch the story and cover it as much as possible. So guys, that brings us to the end of the session today in terms of the video. If you did enjoy it, please remember to subscribe, smash the like button if you do enjoy it as well. It really helps us out, and we are almost near 70,000 subs. So I want to say a massive thank you to everyone in the community that's been sharing the videos, it's been enjoying them. And in general, I wish everybody the best out there. I hope you didn't get burnt too much. I know there was a couple of other positions that were doing very well yesterday. Some stocks were up 3-4%. Some stocks were down a little bit as well. It's going to be a bit muddled through earnings. It's going to be super exciting, and you guys better get pumped for what's going to happen next week and the week after, because we've got Apple coming. We've got Microsoft coming, Google coming. They're all going to be releasing their results, and it's going to bring us some fireworks. Thanks, guys.